Every morning at 8:45 Eastern, Option Omega's got your back. Troy's dreaming big like LeBron. Matt's backtesting like a daddy Mac. Dan's 30 years got our way, trading life and markets every day. Rusty's chained to the mines, digging deep day by day. But when Option Omega releases new features, he's free to come out and play. Option Omega, you're trading home, where every move makes you feel less alone.
Troy's dreaming big like LeBron. Matt is dreaming big like Halliburton.
That's right.
Matt, how are you feeling?
I'm tired, but I'm okay. How are you guys doing? Happy Thursday.
Well, Troy, would it be fair to say, no, I don't want to speak for you. Your camp's in the Lakers. Are we on Pacers bandwagon this week? Or
Listen, I think we can all agree we hate New York City. I think we can all agree with that. So listen, go Pacers.
Go Pacers.
I have my concerns. I'm going to state it right now. I have my concerns about if they get to the finals versus OKC.
That's fair. We can talk about it.
Yeah,
I'm just going to say that right now. But listen, Dan, I mean, this is the thing. This was a huge night. I wish in some ways, I'm glad the Pacers won. It would have been easier to not have to talk about it if they hadn't won. We would have moved on.
True.
Because there's some things.
Yes.
There's some things happening in the market.
Yes.
That you know are little. We've talked about it a little bit. Mm-hmm. Like Matt has been talking about how good the Pacers are, and he's living up to it. We have been talking in previous weeks about the bond market.
That's right.
A couple days ago, we talked about the bond market.
That's right.
And the bond market is here. Dan, what do you know about the bond market?
I know probably next to nothing. And I was asking yesterday to some students, just saying, tell me about this. How much bigger is the bond market than the stock market? And he threw out a few numbers. I don't know, something like the bond market is X trillion, stock market is definitely smaller. But it's now the last 2 days, they've forced us to pay more attention to it. So you're looking at and I think yesterday the news was, I was asking students, I guess they did some 20-year auction and they were surprised at the auction, went maybe a little beyond it. But to me, the big story here, I get it with the bonds and everything, Troy and Matt, but to me, I just love when I was reading, I was tickled by President Trump's, he called it the big, beautiful plan. Is that it? The
big, beautiful bill.
The big, beautiful bill.
Big, beautiful. I mean, I love that. The market so far in the morning today doesn't think it's as beautiful as he is. I mean, I think it's trying to digest it, but I mean, that is wonderful. Isn't it a name? I'm the big, beautiful plan.
Big, beautiful bill.
What do you think about the big, beautiful? I mean, you guys, on the numbers, what do you matter, Troy?
I think these stories are related because this tax bill seems to be continuing the extreme deficit spending. And that again, we are not bond experts. There's lots of people you can go to for ruminations on the bond market. But if there's a shift, and the market's always shifting it's always moving. But if the demand for long-term national debt from the US, from Japan, if that demand wanes, that has massive impacts. And the US being in a position where the deficit spending just continues and the national debt continues, like that certainly has a role on people wanting to buy the debt issued by that country, by that organization. That's what it is.
Well, and the Japanese bond stuff, if you ever heard of the yen carry trade, this is important. And we'll talk about this more one day when it actually crashes the market. We'll do this.
When it actually crashes the market.
But I'll say this. I'm trying to get better at YouTube advertising. Like I said, Lambos, things like that. But I kid you not, 2 days ago, I thought to myself, this Friday, I need to do a video that sounds really scary about, like, is the bond market about to crash the economy? And son of a gun, if I would have had that video out yesterday, we'd have 100,000 views because people have no idea what it is. But let me just say this real quick. If you've never, if you don't know anything about it, to Dan's point, the bond market is a lot bigger than the stock market. And the bond market is the actual economy. People talk about like the equities, like mom and pop businesses, Walmart, things like that. All of those people have to borrow money to run their business. And that's the bond market. That's the way you think about it. And so with the yen carry trade, people, what they do, because the yen has historically been known for being a really, really small yield. So what people would do is they would borrow money in the yen and they would use that borrowed money at a cheap rate to buy treasuries, U.S. treasuries that have a higher rate.
Arbitrage.
So it's the yen carry trade. I mean, it's not a secret. I promise you, this isn't insider knowledge. You can look this up. And so what happens is the Japanese bond market is collapsing. And so Japanese bond yields are on par or larger than U.S. Treasury yields right now.
Right now.
So guess what happens? Guess what happens to a U.S. Treasuries when suddenly people aren't buying U.S. Treasuries? Well, that makes our yields go up.
Yes. Which is actually counterintuitive if you...
Yeah, I was going to say, how does that make sense?
Yeah, so the yields going up is reflective of the demand not being bullish.
And this is the most confusing part about the bond market. Basically, when bonds are selling off, the yield goes up.
Right.
Yes.
Which is that, if you remember one thing about today's show, that's that. When bonds sell off, the yields go up because basically they have to price them for buyers. And so it's an auction. And so if the bonds are selling off, you know, if no one's going to buy a 4% yield, you got to go to 4.1. Well, you know, the yield has to rise.
And that's where the anemic demand. So, I mean, I think it's Rick Santelli on CNBC usually rates. I didn't see what he rated the auction yesterday, but back in the day when I used to watch it for entertainment purposes only, just like our show.
He's great.
There's no financial advice on CNBC. Yeah. Rick Santelli is fantastic. Yeah. But he would rate the market. So I have you can there's tickers that you can add to your watch lists to if you want to watch, you know, treasury demand, TNX, TLT is a trading vehicle on bonds. So there's there's our chat's already on it. Our chat is so smart. So yeah, there's things you can do to pay attention to it. But yeah, I mean, guys, what was that? I mean, did we talk about the Trump put on the show, or was that offline? I can't remember, but
I think you said.
I think I talked about it on the show. This idea that, like, and this wasn't Trump yesterday, but this idea that in this second age of Trump, in this second term, is there going to be a put on VIX? Like, is VIX going to are we getting back to 12 VIX or 13, 14 VIX? Like, I don't know. I don't have a crystal ball, because if I did, there's VIX options, but it just seems like, you know, yesterday we were at I need to pull up a chart, but I mean, we went from what in the 17s up to what are we at right now? Over 21.
Yeah.
So, that's not insane, but it is waking up a little bit.
Oh yeah. And it's so far to me, it looks like, and then I want to make a quick comment from Troy got me. I'll have a Santelli story. Rick Santelli. It's Santelli, right?
Yeah,
Santelli.
Rick Santelli.
Yeah. But I was going to say, I mean, so far to me, this looks, if you're following VIX, I want to get Troy's thoughts on this and Matt on it looks like this could be a good replay a little bit of 2022, where for at least 2022, at least 10 months of the year, we stayed in at 1831 VIX level. And I think right now, 17 has been like the last couple months, kind of the low end. And I still think 16, 17 on the low end. People say 23, 24 on the high end. I might raise that to 30 just because I'm more respectful of what things can do on the downside. But I just think we're in I don't know how we can't be. There's still a lot of these things that aren't finished yet with the tariffs. Right. So I think we're just going to stay in this higher end. I don't think we're going to 12 or 13. Yeah. But real quick on Rick Santelli, I mean, I give him credit. He's
a Chicago guy. Do you know him, Dan?
I don't. I mean, I've said hello to him quite a few times just because when I would take a break coming up, the Chicago Board of Options Exchange was right behind the Chicago Board of Trade. So Rick was in the Chicago Board of Trade and the bonds. I mean, we're talking 40 years. I mean, he's been there
he's an institution.
He's amazing. And so he would come out, he's a short guy. He'd come out, with his suit on, he'd come out to take a smoke. You take a smoke between right outside. So I always tell Troy, they have a legendary cigar lounge there right from the Board of Trade. So all the traders, when they take their 10:30, 11 o'clock break in the morning, they go to the cigar shop. Some would go outside. They'd have a little cafe there. And Rick would come out for a smoke between breaks. And he was always very friendly with everybody, talking. And I mean, nobody makes a boring auction or something more exciting than Rick. And I don't even know 80% of the time what he's saying.
Talking about bonds.
But I listen to him and it's like the enthusiasm. I'm like, whatever he just said, let's go. Right?
Yeah, Chat, should we get Rick on the show for an OO?
Oh, it'd be great. I mean, he can make those, and he whips those numbers he throws those numbers around like nothing. But
I love it. And listen, here's the thing to Rick Santoris, and I've heard him say this before. I'm going to just put this out there. We talk about risks and all those things, and we talk about tail hedging. I think we've said pretty openly on the show, Troy is a vol guy. Like, I like that stuff, but I will say this, and I just want it on the record for my YouTube purposes down the road. I need to say this, like tariff, this is not being facetious. I'm not joking. Tariffs are literally 2% of what the damage that the bond market can do. The bond market can absolutely destroy the economy.
They're talking about why. Yeah.
Here's why. People say, well, it happened in the past in the 80s. Dan, what did interest rates go to with Volcker? It was like
crazy.
16.
Mortgages were like 15. I mean, they were crazy.
Yeah. So here's the thing. There are already calls on the street that at a 7% interest rate, there are major banks because of their debt limit that would fail.
At 7.
Yeah. Like, we are such a leveraged economy. This is my point. Such a leveraged economy that if interest rates go crazy, the equity market is dead. It'd be dead. And so I said this the other day jokingly, but like, if interest rates go at 5, if the 10-year crosses 5, all entertainment purposes, not financial advice, if it crosses 5, hide your kids, hide your wife.
Where are we at now? 4.6,
4.6.
4.59. Yep.
Yeah.
And so something that's super interesting about this whole discussion about leverage and interest rates, and to your point, the yen carry trade actually is an example where people, the economy is financialized, right? People have found this like edge or arbitrage in a certain area of the economy. And then like with no regard for they just keep going. They double down, they triple down on it. And there's all these other, I think it just creates a much more fragile system to Taleb and Spitznagel, and people talk about risk and hedging. And there's these other markets that get very dislocated, and you start having these second and third order impacts that are just going to be like, we don't know what they are. Like I'll give you an example. And again, not prognosticators, not macro guys, but I do a little bit of personal trading and some non-option stuff. And there's commodity trading. I don't trade commodities, but equities that are commodity tradings. And you start to have these other markets like gold as breaking 3,300. It's at an all-time high. Well, platinum has traditionally traded, kind of in line with gold. Platinum has been depressed for years. You start to dig into it and you're like, oh, this kind of seems like an artificial depression, the supply shortage. You start looking at it, and then you look at platinum and you see in the last 6 weeks, it's gone from $895 an ounce to nearly $1,100 an ounce. And like, that doesn't, why is a metal moving like that? Is that the result of a fundamental thing? And I don't want to get talking about platinum, and I'm not a platinum expert. I'm using it as an example that there are these second and third order effects. To your point, Troy, the bond market is, the size of the bond market is something that we can't comprehend. These are not numbers that normal people can deal in. These are not even a lot of times company size numbers. These are nations and large pensions and huge organizations deploying huge swaths of money. So
listen,
what was the bond market? What crashed in April? Was it tariffs or was it the bond market?
Right. Exactly. We all, if the bond market traders are listening, shout out to the bond market traders.
Yeah, and come on the show. Teach us about bonds.
The most terrifying people in the world. Everything I've heard. Oh, Dan, hold on. I muted you for a second. Sorry.
You're getting me a little scared on the show today, Troy.
Yeah, no, I listen. We'll keep going. Let's get happy.
I'm buying puts right now.
Yeah, that's right. As we rally.
The chat said the market loved the commentary.
I do.
When we started talking about platinum, it was a green candle, not a platinum candle.
Guys, listen. So we have been talking about DCs, and as promised, we've said Thursday DCs are typically not known for being great. Thursday, a lot of trades are typically not known for being great.
Entering the DCs on Thursday.
Entering the DCs on Thursday. Yes. So today I give you the weirdest one yet. It's not a Thursday trade. It's an any day trade. We're switching it up for today.
Okay.
But this is a weird trade. I'm going to say this right now, but
I like weird trades. Yeah.
I love weird trades. We call this the Troy trade. The Troy 14-year-old Troy trade. It's just weird. All right. So let me share my screen real quick. Can you see that?
Yeah.
Yeah.
Okay. So here we go. This is a QQQ trade as we've been doing all week. It is a 20 delta short call and put, 9-day short call and put strangle, and a long 23 delta strangle at those same strikes. So we've gone out in time. Now here's where it gets even weirder. You're going to open this at any time of the day between 9:32 and 3:59 when there's a move up of a sixth of a percent, when we're up 0.6%. So, and you're going to get out when you are 1 point past the short strike in either direction. That's it. That's the trade.
That's the trade. Let it cook.
What do you guys think of that? Dan, we've had a controversy on the show before because I think you actually taught me 923. and
know.
you don't remember that. So,
I might have remembered that a year or two ago. The brain cells are going to no. I think something like that. I think on this type of trade, wouldn't you call this more of a little bit of a momentum thing, right?
Yeah.
Because it's you need 0.6% up, which again, I'm still thinking of what was it Matt brought up a few weeks ago, that we don't have even that many 1%, but 0.6% seems more doable. And on the day we're doing it, now the exit on this thing, Troy, this is, what's the exit? Oh, when call tested. So on the upside, what's the -1 on that one? Exit when call. What's the exit?
Matt,
Yeah,
can
so
you talk to the call tester?
you're just you're exiting when it's past the call. So
just when it's by $1 past the short call.
Yeah.
So like if you go right now, the 505, this is May 2nd trade.
Yeah.
505, you're setting it basically at 506. At 506, get out. And that was, you see that reason. So
I like that. I like that because, when you think about it, on a 923, I don't want it to go to the short strike real early in the trade. Agree?
Mm-hmm.
Because you really haven't accumulated much theta. I don't mind it going to the short strike later in the trade. So by this saying move up 0.6%, we're starting to move towards that short strike relatively quick. So you can't handle that much past the short strike. Wouldn't you agree? Early in the trade versus later in the trade on the upside, especially, you can't handle as much as you could the downside with the vol going up. So I think on a 923, that -1 makes sense. I don't know if it would make so much sense. Do you agree with maybe a 0, 1, or 2 day thing? But a 9-day, if you're entering on a day that it's up 0.6, it makes good sense, because if you go a lot past that short strike, if you did a exit on a delta thing, like a 70 delta, you'd be taking some pretty good pain. Wouldn't you agree?
Yeah, I think so for sure.
I like the rails on this one.
I mean, this is, to put it in perspective, looking just a quick glancery thing. Good catch, Joseph. Yeah, you could definitely add early.
Yeah, I've got a link as soon as that's next up, Joseph. I'll post one here in a second.
So one of the things with this is, I mean, a quick cursory glance looking at the brokerage this morning, like this would get you 9-day 20 delta right now with the vol environment would get you about 15 points away on the upside, and would get you, let's see here, about 15 points. Yeah, 15 points away on the downside as well. So, you're going to get about a 15-point range.
Yeah.
And,
right.
9 days, that's pretty good.
So I've got a version here. I'll post it here in a second. But Troy, can you talk about the healthiness of the slippage? And I'll post my link here as soon as you're done.
Well, I mean, I added more slippage to this because a longer dated spread, you're going to get a bigger slippage. So I put 3 cents. QQQs are so liquid. You could definitely test different things in it, different ways of looking at it. But, I think 3 cents for right now is a good starting point, if that makes sense.
Yeah.
Yeah, QQQ is super liquid. I'll post one in the chat right now. So my variation's a little bit different. So Joseph, this is one that's closing earlier in the day. And I made another change just because people talk a lot about the fees and commissions, and we try to be representative of what's out in the market. And this version here has a little bit lower fees and commissions. Actually, I'll make it 15 cents. That's probably even more common than 13 cents. But there are brokers.
Matt, just send it to me. Send it to me real quick.
Okay, yeah. It's the link in
I can't click on that for.
Got it. So let me just talk about this for a second. So this version has an early exit at 225. So this is going to be brokerage dependent, but to Joseph's point, if you're worried about assignment from a broker or them looking at the account and getting nervous, if you're doing a SAC, et cetera, this one has an earlier exit. And the other thing I did is we try to show different fees and commissions because there are variances in the brokers. So
Matt, can you share?
So the fees, you know, there's brokers that have opening fees of $1 and then they don't close it. This one has opening fees of 15 cents and closing fees of 15 cents. You can change it to be $1 and 0. You can change it to be 53 cents and 53 cents. Obviously, those are going to have variations. But the point I'm trying to make is there is, you know, there's a theme. You can play with it. There's clearly the germ of an idea here. One other comment on this. These tests are here as a sandbox. Like, if you take these tests and just don't do anything to them, you are missing out on better tests. There are better versions of these tests. So nothing that we do on this show is financial advice, but this is some backtesting words of wisdom. Take these backtests and make them your own. This backtest has rails for an exit on the put and the call. Double calendars win and lose in a couple different ways. And one of the ways that double calendars win is that you finish near a put and a call. One of the ways that double calendars lose is when the tent sags. There are multiple ways for the tent to sag. This backtest does not have a tent sag in it. Is it possible to find a tent sag that makes this backtest better? If you had a world-class backtester, you could maybe play around with that. So shout out to the chat. I made the fees and commissions 15 cents on this one. We had somebody mention there's a broker out there that has 13 cents. So trying to be realistic with those. Again, we're giving you variety. The brokers all vary. People have different arrangements. People have different deals. But I think this will get you in the neighborhood of some real life fees and commissions. And with 3 cents entry and 3 cents exit slippage is a pretty healthy amount on the Qs. Again, it's not directly equivalent to, you know, 1/10 or 1/8 or 1/5 of SPX, but it should be in the neighborhood. So
hey, can I make a few quick points?
Sure.
I apologize, as I was giving a little bit of analysis before. Again, I'm so used to trading SPX that I'm giving comments based on SPX. And
sure.
This is
natural.
Confused. So I'm like, it's a whole different vehicle. But a couple of things. My experience doing a 923, just relating, I mean, it could be applied to Qs, but I've been doing it with SPX. Generally on these, until I've seen the data. And that's why it's like Billy Beane, that was his name, right? Billy Beane.
Yes.
Here's how I was trading it. Now I'm thinking of tweaking it now that we have Matt is the who's the guy that Billy Beane, and then who's the data guy? Pete. I love Pete.
He gets on base.
Oh yeah, he gets on base. I love that. So the 923, the way I would trade these, and I still have traded it like, okay, I'm going to be in it. I'm just going to stay in the 923. I might stay in it 2 or 3 days max. Get the 15% or whatever. Get out. And then, you know, keep the max loss accordingly, not lose much more. And that has worked well. But I think seeing the data that if you can, you know, leave your hands off it, which I'm learning. The other thing I want to just mention real quick, you mentioned this concept tent sag, right?
Yes.
And just so I understand, so tent sag meaning, you know, generally with a double calendar or a calendar, there's a nice peak in the middle. And so you're saying tent sag maybe where you're starting with the profit graph near zero? Is that the...
Sorry, when I say tent sag, what I'm referring to is the the value being baked out of the shorts, which is what you want, but also the value starting to bake out of the longs, which is not what you want.
Okay.
So there's several ways to backtest that in OO. One of them is short long ratio. You can do it on a VIX exit, on a VIX 9-day exit. And quick aside, I also realized I had a couple of variations of this test. The one I shared has a 15 delta. You can make that a 20 delta. Again, take these back tests and make them your own. We're giving you lots of different flavors of Skittles.
Well, one idea on just a different, just like there's maybe 3 different definitions of delta. On 10 sag, because I was thinking about this yesterday. Let's say you're doing a double calendar and you set it up at 20 delta or 23 delta for your wings. The middle of the graph is up. Agree? Because and it's a positive theta and you still have a lot of room. But I've set up, if I'm in a little more spec mood, right? Where I think there could be a bigger move, right? I've set it up where the longs are at 10 delta, or excuse me, the shorts are at 10 delta. Or a little bit less. And what's nice is you have a spec move. Obviously, you won't have as much positive theta as the 20 delta or whatever, but you'll still have a little positive theta. But boy, now you've got you're giving up the middle to get bigger, farther away on the wings. And so someone might say, okay, if I'm spec, but Dan, if it really sags in the middle, you get toasted. What I would feel comfortable with those in the current market, if you're looking for a little bit bigger move, right? And you're comfortable that VIX is going to kind of shouldn't go much under 17, I'd be comfortable with that. So to get a spec, to spec a double calendar, you're going wider out, but you're giving up that middle. And I don't mind giving the middle up if I'm comfortable with the VIX level. So a little different thinking. Matt, have you had many, or Troy, the tests with like a 10 delta or something like that? What have you, what's the data say?
I mean, we did that one. Yes, there are lower delta DCs that are positive expectancy. And again, the Discord was talking about MEDCs the other day of, yo dog, I heard you like DCs. Here's some DCs to hedge your DCs. We talked about that that 5-3 the other day, which you can, I mean, it's kind of trading a 20 delta call calendar, but you could throw a 5 delta put calendar on there. If you want to add some short deltas, it's still a positive expectancy trade. So the back test was still a back test that's worth chomping on a little bit. So point is, I think, Dan, I think you're exactly right. And in the age of automated trading, it's, I think I had 8 calendars on yesterday at the beginning of the day, and trading all those manually, watching delta exits and profit targets and short longs and like all this stuff. That's kind of a healthy task, even if you're kind of doing it kind of full time, like watching the screen. But in the age of automated trading, like if you have a platform watching it, it's a different discussion. It's just a different conversation. And so I think this idea of having DCs, again, of maybe instead of having one DC that you have, X% weighting, you split that up into 3 different DCs and each rate them a third, a third, a third. I mean, again, it's trivial to backtest that with a portfolio, and the users can see what that does to the drawdowns, what it does to the MAR, and how it performs over time. So Troy, this is a super interesting test, and shout out to the floating entry. Again, floating entry would be tough to do manually. You're watching, you got to set an alert when the market gets up 0.6, I got to do this and this and this.
No way.
And again, with automated platforms, this is a different discussion.
Well, and what people don't realize is think or swim has always been like the, hey, boy, you can put in some decent orders, where to get out. You can get into a trade by delta. I mean, this blows it away in terms of, floating entry and all that stuff. You can't even think like that in even the most sophisticated retail brokerage platform. So, I mean, those are some of the things I really like about the platform, is that all these realistic things that I always thought even the most sophisticated retail brokerage platforms, they fall short with, and they haven't really improved in years. And so these are very helpful. I mean, that's what makes me more excited about it, but just because you can put advanced risk management techniques in here. And
yeah, I mean, a couple closing remarks for this. To the point of hedging DCs with hedging. Think about just, when we show tests every day, and so it's easy just to be like, well, it just works, and not think about it. I want you to think about this trade. Don't just blindly do it, and don't even just blindly test it to make it better. Think about what's happening. Why would you put a DC on when we're up 0.6%? Probably vol reduction.
Yeah.
If we're up 0.6% in a day, probably there's a healthy chance, if we're up that much in a day, of either continuation or mean reversion. There's a lot of things taking place when you're up 0.6% in a day that a DC might benefit from. Number one, again, being vol going down. And so when you put these things on, think about why you're putting it on. It'll make you a better trader. Obviously we trust the back tests, but think about why that works. Don't just blindly do it, because otherwise you'll just turn into a robot.
Troy, are you saying people should think about what they're if they're trading financial vehicles, they should think about that?
Yes, I am. And
amazing.
Second point I'll make real quick is, to the point of hedging, I guarantee you, I know for a fact in the option to make it community, most of you guys are not, and ladies are not, doing 9-day or longer trades. So when you put a 9-day, 23-day double calendar on, let's say you have a bunch of double calendars of shorter duration, well, you are in effect in some ways hedging, because these are longer, these are farther out deltas because of the time, and the vega is longer because of the spread.
Yeah. And
so you are getting hedging built in. And so when I hear the linear thing of like hedge the DCs with DCs, that's fair. But if you're going to actually do that, if you're really going to do that, you have to do that with different times as well, different vega profiles, different strikes. Because if you're targeting a 3-day DC at 5, 15, 25, 30 deltas, and there's a vol crush, well, that vol crush for that expiration is going to be universal almost always. Yeah. If you're doing it for different times, some of the longer dated vega might hold where some of the shorter dated vega gets crushed.
And what's amazing is you can backtest that in the portfolio feature of Option Omega.
Of course.
Well, when you think about everything is, I think the starting point, like Troy said, I think of the Aretha. Now I got thinking of, was it Aretha Franklin that made the song Think About Whatever?
Yeah.
I'm not good.
I think
I'm
so.
not as good a singer as Aretha, I don't believe it. But I think when you think of always price vol, but I've always looked at diversification's a big one. During the week, you try to diversify. Okay, I can diversify my price risk. How? Like Matt said, you're not putting trades on every day. You're putting them on different days, so you have to diversify your price risk. But I think that's one area, like Troy said, where I think people miss a lot. Diversify your duration. Always, I have, looking at trades, I might have a little bit further out, 9, 10, 15, 20 days out, but you have some 2 or 3 day trade and some 0 day, or, I just think that's healthy to diversify your price risk by putting trades on different days, diversify your duration risk, which it diversifies, and then the volatility. You always want to look at where are you leaning? With the VIX here, do you want to be a little bit net long, vega, short? And I think it's just good to look at the big picture a little bit at times. I think it will be helpful.
I agree completely. Listen, two things that we need to head out. Nicola says, I'm pretty sure Dan is a better singer. I don't think that's true. And then 2, if interest rates get above 5%, I will meet you guys in the cave that we talked about. So shout out to everybody. Hope you guys have a great